Are you wondering what's going on with the real estate market? Hey Grand Rapids, Kevin Yoder here. I'm back with another market update for you. This one is slightly different because I'm going to hone in on 5 key areas. And guess what? Look, this is confusing because the national outlook will give you one thing. So if you're watching the news in the morning, you're watching the news at night, you're going to get mixed information. The one thing about real estate is it's hyper local. It's hyper local. What's happening in Grand Rapids is different than what's happening in Lansing and different than Detroit. You take that out even further and you get into other states and other regions and the market's quite different. So let's focus in today. On this video, I'm going to give you the 5 key areas to pay attention to. And I'm going to set the record straight for you because of all the confusion out there. After this video, it's going to be short, clear, and concise. You'll know exactly what's going on with real estate in the West Michigan area and how you can use that information to better guide you and your friends and family to have a successful real estate experience now and for the rest of this year. Hi, Kevin Yoder, team leader of Yoder Real Estate, bringing to you valuable information about all things real estate and living and working in the Grand Rapids, Michigan area that you cannot find anywhere else. And if you like this video, make sure you like it and subscribe to it so that you can see more content just like this. Okay, here are the 5 key areas I'm going to cover for you in this video. Number 1 is the amount of active listings. 2 is the average sale price list price ratio, which means how much are the homes selling for relative to the actual list price. The average sale price and the absorption rate, which talks about how long homes are on the market relative to the number of buyers that are out there. And then 5, the days on the market. Let's get right into it. Let's talk about active listings. So if you watch the news, you might be under the impression that things are dramatically different than they were a year ago. So the truth is, as you'll find out here, and I'm going to show you these graphs right here. Look, take a look at the active listings. So last year at this time, there were 3,355 active listings on the market. Now in 2023, there are 3,490. Now this data brings us up to the end of April. Today, the date of this video is May 1st. By the time you're watching it, it's probably a couple weeks into May, but data is all very similar to what it was a year ago. And if you watch the news, you might hear a different story about that. You might hear the real estate market is crashing. It's absolutely not. Inventory levels are remaining, albeit low relative to the time of year and relative to previous years, especially when the market was a buyer's market. Inventory levels remain pretty low right now. 3,490 homes are active on the market. And by the way, this is covering primarily Grand Rapids metropolitan area because the reporting I did, I wanted to keep it tight and concise. Now just remember that just because this number represents Grand Rapids, it's still, the basics are still going to be the same all throughout West Michigan. So the average sale price, again, Grand Rapids specific, but remember that I want to give you the essence of the numbers because they will still translate whether you're in Cascade, Ada, Rockford, Sparta, Hudsonville, Jenison, or the Lakeshore. These numbers will be pretty similar for you because we're dealing with West Michigan. Our area is pretty consistent across the board. Average sale price last year at this time was $301,000. Would you like to know what the average sale price is right now? As of the end of April 2023, $301,000. The same, remains the same. So now we see another key indicator the market is not crashing. Sold price list price ratio. This number is a little bit different than it was last year. Last year, the average home, which is where this ratio comes in, sold for 103% of the list price. Sometimes it sold for 110% or 120%, but the average was 103%, which means if a home was listed for $100,000, on average it would sell for 103. So over the list price. Now, today, at the end of April 2023, the average list price, a sales price versus the list price ratio as a percentage was 99%. So 4% off. Now, that's an interesting figure when you look at that stat because it really just tells us what was going on last year. The average home was listing here and selling here. Now, the average home is listing here and selling pretty darn close to list price. And in some cases, it still is going over. But in other cases, we have sellers and agents conspiring to hang on to yesterday, which means pricing from last year, and then those homes have to have price reductions. I'll take a moment to share a little bit about that. Every single time, barring, and there's no exceptions to this, bar none, when there is a longer days on the market, 2 or 3 times the average, it's always a case of a price too high, making an adjustment after, say, 30 days or so, and maybe a second adjustment, and then a final sales price. I can tell you this, whenever the home is listed too high in the beginning, the days on the market is right now would be somewhere around 60 or 90 days. That sales price, pay attention to this, that sales price is always lower than the average sale price in the area, which means they listed high, they made an adjustment, they lost their velocity right out of the gate. When you first list a home is when you get the most eyeballs on it. They had to do a course correction that couldn't keep pace with the market conditions. And by the way, people start to think there's something wrong with a home. So they miss their shot. They miss their best chance of getting the right price. It ends up selling for less than market value. And I've seen sometimes where that's 30, 40, 50,000 under the average for the area. Okay, so the average sale price, 99% of lists. So still selling pretty close to full price right now in West Michigan. The absorption rate is simply, it's how many months the homes stay on the market. So it's a percentage relative to the number of buyers that are able to absorb the inventory. So what it states is that we have 1 month of inventory last year. So that meant that if nobody listed their home in 30 days, all the homes on the market in the area would be absorbed, hence absorption rate. They'd be all bought. There'd be no homes on the market. So what is it today? 2023, May 1st, it is 1.24 months. So we're only up 0.25, which is basically 1 week difference from last year. Pretty similar, right? And then finally, days on the market. Last year, the average days on the market was 21 days, and now this year, the average days on the market is 38 days. So now we're beginning to see that the market was an extreme seller's market. It course corrected around July to August last year. If you look at any graph, and as I walked you through this, you can see the graphs showing you where the prices were. You'll notice that reset, and then now the market is starting to go up slow and steady up the other side, keeping pace with where it was last year before that huge run up. And that's what the expectation is for a naturally improving seller's market, not an extreme market, but one that is more of a moving towards a middle market. You'll see average days in the market going somewhere around 30 days, 30 to 40 days. Buyers and sellers can navigate more easily, and it gives everybody a chance to move around more. The caveat here is that the low inventory is keeping a lot of folks in their current homes that would otherwise move down or move up because they're having a harder time finding that next home. So if you're somebody that's looking to get into real estate marketing, you've been on the sidelines because you've heard the news of the doom and gloom and you don't want to make real estate an investment, I wouldn't advise that, because real estate has been a tremendously amazing long-term investment for somebody that's able to get into it and stay in it for a long period of time. And remember, you're going to buy the home for the home, and you're not going to marry the interest rate, which means interest rates are a little bit higher today, and you could always refinance out of that. I put a nice link down below for this entire report, so you can click on that and look at all the numbers that I shared with you. Additionally, I've added something else to the comments below, and I'll keep that in all of my videos, which is a free home evaluation report. So down below, you see the report for all the stats that I shared in this video, and a link. Click on the link if you want a free online home estimation value tool. So essentially, it'll give you a rough idea of what your home's value is. And that's absolutely free to you. I pay for it and I share it with you. I hope you enjoyed this video today. And if you want to learn more about what's going on in the real estate market, make sure you subscribe to this channel. So every time I make a video, you're going to be notified of it. If you like the video, please like it. And finally, add a comment below. Is there a question you have for me about the market? Is there anything I didn't cover that you wish I would? I'm looking for feedback so that I can make videos that are customized to what the audience is looking to find out. And I will make those videos every single time I see a comment. I pivot, I make the next one about the question or the comment. And so I'm here to serve you. If you need us at Yoder Real Estate for buying or selling, go to our website, yoderrealestate.com, and I look forward to seeing you soon.